Hi guys, welcome to Trade Talk, and it's Friday evening. We're going to cap the week off now in style, and we're going to go through a few currency pairs and gold and silver, one or two of the indexes, and we'll see where we are. I'll send this out as a recording into the group later tonight, first thing in the morning, so you can mull over it over the weekend. How does that sound? Right, first off, let's have a gander. I'll be looking at more trading view charts later on next week and from there on, but I just like these MT4 charts with a few of them were simple, well, exponential moving averages. I call them simple because they're relatively simple to gauge, but they're not simple moving averages, they're actually exponential. So if we go on indicators, trend, moving average, you can see I've got them as exponential on there, okay? I like to use the exponential ones instead of the simple. Slightly better reading. They are slightly different in levels when it comes to moving averages, especially the longer term, shorter term ones. Right, so we've got the 1855, we've got the 110 on the chart as well. I'm just going to go through the pound, euro, dollar yen, pound kiwi as well, which I've got a trade on the other account. And that's that. Right, first off, what do we see with, let's look on the daily for this. Now, we've obviously come into some roadblock here at just in and around the 130 level, haven't we? A huge roadblock there since mustering up the momentum down at the lows of 120. So pretty much a 1,000 pip rally, isn't it, from the middle of August? And you cannot complain with that. Short, sharp spike there. Now we're deteriorating off. And, you know, it's always, isn't it, buy the rumor, sell the fact. It was all that good news going into Brexit. You know, there might be a good deal. There might not be a Brexit at all. There was just so many murmurings going on. And, you know, the markets thrive on that. Markets thrive on hearsay. I've said it so many times before, and it's just the case. Now we have hit a stumbling block at that 130 level, and it looks like pound's definitely going to give back some of these gains. How much of those gains we shall see. I'll do a fib retracement at the moment from the lows of August to the highs here in the last week, but we are building up momentum now to the downside, especially on the daily. We've got one of our red DeMarco arrows here on a red candle, another red candle today, so we could see some retracing, you know, at any of these levels here. We've got a DeMarco support here in and around, well, sort of 123.75. Our moving averages penned in and around, let's check those levels. Those levels are indeed the 18-day, pretty much at the moment is 126.95. 110 moving average, 125.22, and the 55 just slightly below that at 125.05. So pretty much 125 flat, 125.22, just barely 20 pips higher than 110, and we've got 126.95, so pretty much 170 pips or so above these two here at the bottom. So this could be the sell-off could be realistic down towards this 18-day moving average. I'm on the daily chart, remember, so it's an 18-day moving average. So there we could see, if we do get some good news or there's a good vibe and the market likes what it sees just in and around the 31st, or there's some resolutions and whatever there is with Parliament over the coming days, this might form a base for a new rally beyond 130. If the market can't get above 130 during the next week to 10 days as we go into the first week in November, that's going to remain resistance, and hard resistance at that. And we're going to head back potentially down to that 124 respite area there. And if there's a hard, you know, if there is a harsh outcome to proceedings the end of the month, we will blast towards those lows of 120. There's no doubt about it. All right, so let's just zoom out here. I'm going to do a fib retracement. I'm just going to delete those a second. So let's go from the lows here. I am going to just change the color of this background slightly. The background I'm going to do black. I'm going to get rid of the gray there. Okay, that's better. So I'm going to do the fib retracement here. So we're going to go right from the low, where I take this trend line here and put it right to the top there. So what we've got, we're pretty much down towards this, the ultimate, apologies guys, the ultimate target for this sell-off is 23.6 retracement here, and from there we could see down to the 38 and ultimately the 50. Now, interestingly enough, if we take our sweet time, maybe a week or two for this into the first week of November, the 50% retracement zone of the Fibonacci here coincides with the DeMarco support trend line here in and around this level, which is pretty much just below 125, isn't it? 124.90. So that could be a target there in the near term if things aren't great with this fallout coming in the next week or so. So that's a relatively good target there, 50% line. So let's see. The first base is obviously this level here. The first base is obviously 23.6 at 127.68, 127.60. All right, so we'll proceed there with caution, but until that 130 is busted to the upside, there is no way you can be buying this market. Moving on from there, let's look at euro dollar. Again, big resistance to that 111.70, isn't it? 111.70 there. The DeMarco trend has been seen. It's matched up the highs. They're the most recent highs. And again, that level, big resistance. A nice buy up there. We've been given the signal down here, weren't we, on the 3rd of October, which was lovely. A few of our clients made nice money there. This was just before I started doing the signals for the Enigma group. This is my previous group, and then 111.80 pretty much. We've now seen some downside resistance. Now, what's pretty ominous for euro dollar is the fact it's making lower highs, and these lower highs, it's obviously made them here, but on the rally up, we're also now lower here. It's turning into a descending wedge here. If we zoom out, and it's not nice. It's not nice whatsoever to look at. Let me just draw that a little bit better, just to see. Coming down here, got the lows, and if we can't get back above that 111.70 level, back above here, there is no way. If we can't get above here, break above these levels, we are just going to head back below towards the lows of the descending, obviously this descending channel here around 108, etc. That's where we're going to end up there. So 111.70, 111.50 at the moment is big resistance for euro dollar, but we proceed into Monday with caution. But we've got the channel it needs to break out of here, right there. And then base here, 109.30, 109.50, 109.35, pretty much that. Let's look at pound yen. Again, another top scene, isn't it? We've got an amazing rally over 1,1300 pips, more than pound dollar, from these lows to the highs. But again, it's made a lower high. From these lows, we've mustered up a high here that's lower than the previous highs in May. So we've got to be careful. Okay, sorry, apologies for the drawings, guys. But above 141, let's see where it touched. Around 141.50, 141.46 to be precise. So we've got potential support here, in and around this level here, the DeMarco support around 136, 135, before it could then rally back higher, testing that 140, 144 resistance here. So let's see with that one. It will be very interesting. But again, like pound dollar, pound taking a breather, and it's the make or break week next week, isn't it? I'm going to just skip those. I'm going to look at pound Kiwi. Actually, do you know what? I'm going to look at gold briefly. I'm going to quickly look at gold. zoom in here. Again, over the last few months, we've been making lower highs ever since we topped out at 1555. So it's looking ominous for gold, to be honest with you. 1508, it failed today to get above and stay above the DeMarca resistance here, the green horizontal line. So that for me spells that, you know what, 1504, 1505, 17, that DeMarca green line there. I'm just going to zoom in one more on that. If we can't maintain ground above there or close above that level, if we close below this 1505 level, it does spell the danger that that's resistance. It's telling us that that's resistance, and we could head lower here back towards that 1480, 1470. Okay, if we zoom out of there, it just doesn't look good, does it? You know, on these rallies back above 1500, you get excited, but when you see that the highs are just lower each time, and it could just, today, it could have shown some hope. It could have made a suckers rally to suck a few people in, quite literally. That's what a suckers rally is. And look at that, it made a high of pretty much 1520, and now if we close towards the low of this candle on a daily, it doesn't look good. It doesn't look good. And then we'll see what happens next week. But yeah, that could spell trouble for gold, and pretty much silver alike as well. Silver could indeed end up with the same fate as gold if neither one really. 1825 is the big one for silver. That's the big level for silver. 1825, 1830 right there. And it's got a bigger resistance at 1850. I did put in the group 1840 sell limit, which is a perfect. If it got up to this level, it's a nice sell. I don't know if it made it. I hope it did. I hope you got in on that, guys. I think you got in on the gold trade as well. That's an actual sell execution. That should be on a profit now, around 1514, and the price is now from 1503. Silver, ours didn't get activated. IOPOS did at 1840. Let's see what the high of the day is. Let's see what the high of the day is on this candle. What is the high there? Let's come off here a second. 1831, isn't it? 1831. So it didn't quite get touched, but it has come off all the same below 18. So really, overall, the big one is 1850. If it can't maintain ground above it, it kind of coincides with the DeMarca resistance, the green horizontal line. If the market cannot get above there, then we will, you know, be trapped in this confined space of the DeMarca support and maybe head lower back below 18, down to the low 17s. Here with the DeMarca support here at 1694, 1693. So that could be another test point. Again, zoom out, and it does again look ominous for silver, doesn't it? Because lower highs again, lower highs. Join the dots, we could come off again, make another lower high here, and then just come off. So for me, I don't see any breakouts in gold and silver personally. Again, not advice, my personal opinion. I just don't see any major breakouts to the upside yet. Okay, that's just me personally. Don't see that coming into play just yet. Let's have a look. What else can we look at? Let's pick a random one. Aussie dollar. Let's look at Aussie dollar again. Aussie dollar, lower highs, isn't it? Look at these here, lower highs. Join the dots. There we go. So if we zoom in slightly, we've got a DeMarca arrow up here, DeMarca sort of arrow telling us that potentially we've topped out here. We could look to sell, and I'll be looking possibly to sell this next week, but we've got a blue arrow now in play today with the downward momentum, but no real buy-in should be had below 68.75, around this level here, below this DeMarca resistance, anywhere below 16.75. I think you're living on a prayer, to be fair. 68.79, that's resistance for me. A breakout above there, fair enough. 68.80, 68.85 towards 69 and possibly 70, but anything below there we could test this lower channel of 67.60, 67.650, and if that breaks, then we're going to the mid 66. Nothing huge on Aussie dollar though. It's quite boring, to be honest. It has been for a while. Dollar CAD, let's have a look at dollar CAD. I'm going to look at pound Kiwi. Dollar CAD, again, it's been a lovely sell for our old clients. We were already in the middle of this move when I first came posting to the Enigma group, but our original clients had a nice sell on this with the DeMarca arrows there. Lovely, lovely sell on that, you know, making nice 300 pips down towards current levels. Crossed all three moving averages, and around here is when the 18-day crossed the other moving averages nicely to the downside with a downward slope of the 55-day as well, and the markets from there just slid, and that was lovely. From there, I think we're going to see potential support kick in here. It might linger for a few days, but we should see support at this 130.60 level for the market to find its feet, and then we'll go from there. Other than that, I don't really know. I can't really give a handle on it. If it does hold here, at least it's a higher low from the lows of July. If it's a higher low here, that would be good. Could look to expand on that and get back above this line 133.22, 134, 133.50 pretty much. Above 133.50. Above 133.50 is that median line, 133, yeah. So anywhere above there, have to get to the upside, that target at that 135 level there. That could be a nice 200 pips in that 135 as opposed to 133, 133.50 up towards that 135, 135.50 level. So 150, 200 pips to be had there. But we want to see this bottom out. We want to see this target the upside there. Definitely going to have support hold here for the next few sessions. If it breaks, next target to the downside could possibly be 127. The lows of late this time last year in October 2018 around this level, 127.50. So we'll keep an eye out, okay? But again, big lower highs, aren't there? But we'll see on that. Let's look at pound Kiwi now. It's going to end off, going to get on. It's a Friday night late, so I'm going to get on. We're going to end on pound Kiwi, guys. Oh, then I'll have a quick look at the Dow. We've got a red arrow here. So a red arrow has formed here. 2018. And again, that's the resistance here, isn't it? We saw resistance come up here at 2052. 205.26, 20 just below 206, and then we've got 201.85, and then we should see some resistance, maybe back towards that 2 level, maybe 199.50. We could see before we head back up. But ultimate support here is 192. If we do break the moving average here at about 20 flat, 18-day, we could head lower to that level. We shall keep a stark eye on that pound Kiwi, but we've had a nice buy on that already in the past week. We've had a rally up, you know, over 1100, 1200 pips in 5-6 days, pretty incredible. We've now sold off, but for me, the next big level again, we need to get back above to really buy this market. We've got to buy on as well at the moment, 20210, and we've got in, forget our entry level now, 20160 is it? I think we're pretty much 10, 15, 20 pips in profit at the minute. We came off a little bit. We were like 80 pips down at one point, but now I think we've got a good stop loss on that trade, and we want to get our target up here of 205 plus. And I think we will get it, and I think we're going to go to 2.1 eventually. You know, there's another 800-900 pips in this move. There really is. There's another 800-900 pips in this move. It might seem inconceivable at the minute, but there is. Okay, even 2.2 actually as well. Like I said here, if we break this previous high here, we're going to break out, and that's going to be the target at 2.2. Ultimate 2.5 up here, just made in mid 2015. that would be fantastic. But 2.2 is the ultimate target here. Again, guys, what's that? 1,1800 pips in this trade still. Mega amounts of money on the table with pound Kiwi. We've got one running already. If you're still in the trade, well done. I'm holding on to mine. So well done to you if you're still in on that. But anything around this $2 level, we're going to look to buy sell-offs on this, buy the retracements, and then look to just hold our lot, really, literally. No pun intended, but 20181 at the minute. I'm still holding strong. I'm going to have one look at the Dow, guys, before I head on. It's moved again. I did move this twice. So bordering on 27,000. If I zoom out again, it's just teetering, isn't it? Look at that, the highs. They are higher highs though, but recently, if we zoom out, zoom in, sorry, of late, I should say, May, June, July, highs are getting lower. So it's only recently below 27.5, 27.2, pretty much 27. So around 200 plus pips lower each time they make highs. So it's something to bear in mind, isn't it? And that for me spells potential danger ahead for the equities. Whether or not we hit a rally late into next year, I don't know, but the highs are going into this wedge now, and I do feel a breakout above 27.2 or a break below 26.7 is due soon. If we break 26.7, we're going back down to 24 at least. And if we break 27.2, 27.3, we are going back up, say back up to, it's not been higher than 27.5, could head up towards that 28 and possibly target 30,000. All depends how Brexit goes, trade talks into the late year, and any Santa rally. But we'll look at that later next week, because this is a weekly chart. We could see this coil here for several more weeks to come. Okay, this could coil here in this range with a few more candles for 3 to 4 more weeks, which would make sense. Now, which way it's going to go, or break below or break above, whatever, is yet to be seen. But we will either way have to break out of this wedge, this weekly wedge. Okay, and at the minute it's still just about still an ascending wedge, so we shall see. Either way, the breakout will be powerful. The longer it remains in this wedge, like a coiled spring, the breakout will be fierce. All right, the more fierce the breakout will be, but let's see, it could take another 3, 4, 5, 6 weeks. Okay, but it's getting narrower. This wedge is getting narrower, isn't it? It's getting narrower. Where is it going to go? We will play it as and when and go with the breakout. We're not going to second guess this breakout, because for me, at the moment, it's literally 50-50. All right, guys. It's all to play for the end of this year, and I think the next 6 weeks or 7 weeks of trading is going to be eventful and exciting, and quite could potentially be very, very memorable indeed. Hold on to your hats, guys. The next 2 weeks are going to be quite crazy indeed. I wish you the best. Take care, and I'll see you on the other side. Thank you.